In this video, I'm going to be doing the full overview of trade receivables. So, you own a business, right? You got customers. Not all customers will pay on cash. Some of them will, some of them won't. Those who won't basically buy on credit. So what I mean by this, you own a business that sells pineapple and 3 of them buy on credit for 10 rand each. So that's 30 rand. Now you will not receive that 30 rand now. You might receive it in a month's time, 2 months' time, 3 months' time, or you might not receive it at all, right? That's debtors. Sometimes they don't even pay you. So as a business, you need to control your trade receivables, also known as your debtors. Also, at the same time, you need to make sure that you record all transactions correctly. So, firstly, trade receivables, there's something you need to know. Number 1, if you make a sale on credit, so let's say you made 100 rand on credit as a sale, you will not go to your normal journal entries. You will go through something called a purchases journal. Actually, no, a sales journal. Purchases journal is for trade payables, right? For trade receivables, it's a sales journal. So let's see it. So this is called a sales journal, and basically whenever you sell on credit to customers, you put it over here. So your day, your invoice. Now, source document for always when you're doing credit sales invoice, right? But again, this column cannot, you don't have to put it, because sometimes they don't even give you invoice numbers. But if they put it. If they give you the invoice number, then your details, you basically can name the person who is a debtor, so the customer's name, and then you put the sales amount. Now the sales amount will always, no matter what, be here, it'll always be full. And then your trade receivables will always be filled. So basically, you're basically saying, okay, I got 3,600 worth of sales, and those sales are bought on credit for 3,600. Now, straight away, when you complete this sales journal, you see the sales and trade receivables, there's a transaction double entry that happens. It's debit trade receivables and credit sales. Think about it. You're debiting a trade receivable, which is an asset, so it's increasing. You got more debtors. And then you're crediting sales. Sales and income. So when you credit it, it goes up. So you're adding to your sales and you're adding for your debtors. So to prove that this works, it goes from here. Now remember, always when you're recording journal transactions, or basically any transaction in the business, you first have to go to a journal. And this is our journal. Then after journal, it goes to a ledger account. And then obviously after ledger, it goes to a trial balance or whatever. But that's how it moves, okay? So from here, it goes to a ledger. So it's debit, trade receivables, and credit sales. So you go to trade receivables accounts. There we go. And you see you debit trade receivables, and obviously the contra will be sales. Now if you have a sales account, it'll be credit sales and the contra will be trade receivables, but we do not have that over there. So that's the overview of the trade of the sales receivables journal, right? Now the CRJ, now why do we have a CRJ? Not all people will buy on credit. Some people buy on cash. Or you might receive money from your debtors, because think about it, if somebody owes you 100 rand, they'll pay it back in cash, 100 rand, right? So that'll come over here in the CRJ. Now, if you look over here, I told you some can be cash sales. So if you bought, let's say 3,550 rand for cash, some customers bought those products for cash. It'll go in a CRJ, and this will be the amounts. Now remember, always in a CRJ, your bank column will be full with the numbers. So as soon as you get the number, just put it in the bank column. But all these accounts after this is basically, saying, okay, the amount in the bank column, what's it for? Because this was for cash sales, you put that thing in the sales also. For this, you put it in sales. But for this now, so contra. So when it goes into trade receivables, it basically means you got it from a debtor. So it has to mean the debtor is paying the money back, is paying his debt, right? Now what is sundry? So let's say CRJ, you receive money for what? So let's say you receive money for interest income. So you go to a bank and they give you interest on your fixed deposit, so you interest income. You'll put that interest income, let's say 100 rand in the bank, 100 rand. But because you can't put it in sales trade receivables, you put it in sundry. So the amount you put 100 rand and the details you put interest income. So sundry is basically, in summary, where like there's no like accounts over here to put that money from the bank, because all this money from the bank you put in somewhere, okay, because you're telling it where it's from. Now your account, trade receivables account, I told you that amount over here in the sales journal will be over there, right? Trade receivables. Now trade receivables also in the CRJ. So think about it. If a debtor is paying your money, you have to credit trade receivables, because it has to go down, it has to minus. So on the credit side of trade receivables, we should have over here, let's see, 27,000. There we go. And the contra is bank. Now you may be thinking why it's bank. Remember, if you go to trade receivables, anytime we had a transaction, you say bank trade receivables, bank trade receivables. So there's like a two transactions, not transaction, it's a double entry principle, right? Because think about it, the debtor paid you money. What's increasing? Your bank. So it's debit bank. And what's decreasing? The debtor's account, so credit trade receivables. That is why we do that as the contra. Then you balance the accounts, do what you do. Oh yeah, also your sales journal. Oh yeah, we had that, okay. So yeah, you balance your account. And basically the end balance over here basically says how much people are owing you. How much total debtors are owing you. Now, what is subsidy ledger? Subsidy ledger takes this amount, 26,000 and whatever, and breaks it up into where that money is coming from. So basically it's taking all your debtors, naming all your debtors. Each debtor got a separate account, and everything over here is then summarized to debtors list. So all these balances are put over here, and it should equal, so 26,224, it should equal here, 26,224, perfect. So basically in summary, instead of saying, okay, my debtors owe 10,000, but then the problem is, who are the debtors, okay? Who are the individual people who owe me money? This is where ledger, subsidy ledger comes in. It basically divides all the people who owe you money, all the debtors, tells you who, what owes who. Then when they purchase, okay, when they purchase on credit, there we go, they purchase on credit. So like, they got their own individual accounts, okay? And at the end of the day, the balance brought down will be put over here, so that the balances that they owe will be put and it should equal to the trade payables amount. Okay, so that's the summary of the trade receivables, how it works and whatnot, and the journal entries. Yeah, so that's for trade receivables.